Right, accounting cycle. Accounting cycle is uh, it's a sequence of the procedure starting from sequence of accounting procedures starting from recording the business transactions, okay, uh, and finalizing them, through the process, finalizing them, okay, at profit and loss account and balance sheet. Once this is over at the end of 31st of March every year, on 1st of April of the next year, okay, it will start. Let's say the accounting period in India, it starts on the first day of April of this year and ends on 31st day of March of next year. Let's say if the accounting year starts on 1st April 2020, it ends with March 31st 2021. This is known to you, all the commerce students, but this I'm saying for the sake of non-commerce students who are new to this, this particular terminology, right? So this is a cycle. What all you do in between 1st April of this year till the 31st March of the next year, what all happens in this year is sequentially arranged, and the sequential arrangement is accounting cycle. Once 31st March is over, again the cycle starts from recording the business transactions, okay, and goes on. Look at this. There should be a terminal point should be there, okay. If there's no terminal point, how do you know, okay, how do you know whether you've done well or not? Let's say there are no exams at all for BCom, first year, second year, third year, there are no exams. How nice it would be, na? Would you like it without examination? Do you like it? I don't think so. Or for the time being, it may be appearing, yeah, it's very fun, very good. There should not be any exams at all. There should not be any measurement of our academic performance. It may appear, but let me tell you, you get bored of it. Okay, you want recognition. You want recognition. Recognition like what? You want to show that you got B grade, A grade, A plus grade, or A star grade, and things like that. So therefore, we want to know how we are doing. For that, there should be a termination. The termination is examinations. Every semester is termination of that term. And likewise, program termination. Once you complete all the semesters, then you will be called a graduate, undergraduate student, undergraduate, okay, BCom graduate, right? And after that, another program you will take, MBA or MCom or MS accounting. Then that is another program. Once the 2 year span is over, that is terminated, then you get the result. So therefore, the accounting cycle is, starting from recording transactions. Okay, how they are recorded? They are recorded in journal, then that will be classified in ledger, and trial balance is prepared, okay, which is the summary of all the ledger accounts. Then if there are any adjustments, that is events taken place after you finalize the accounts. After that, you will make some adjustments, then you prepare the adjusted trial balance. Then with the adjusted trial balance, you close all the entries into financial accounting, financial statement 1, financial statement 2. Financial statement 1 is income statement, financial statement 2 is balance sheet. Okay, so profit and loss account is income statement. All right, now look at this. This is what? The journal, the ledger, the trial balance. Okay, then you go for adjustment entries and adjust trial balance and close the entries. Okay, then you prepare the financial statements, right? And what's the difference between bookkeeping and accounting? What is the difference between book? This is a common question that all of you get. And look at this. You may be wondering why I'm not making you read this, all right? I have already discussed. You can go through this document, right? Let's come back to the difference between bookkeeping and accounting. Bookkeeping, it does not classify. It is just recording. That's it. It is not bothered with summarization. It is not bothered with providing information for interpretation. That's the difference between main difference between book, just recording only. You will be having a cashier. What he does, whenever the money goes out, he will record. Whenever the money comes in, he will record. That's it. That's all he does. You look at the cash counter of any commercial establishment. Okay, you go to the showroom, you go to any shop. He doesn't know how to tally the balance sheet. He is just a cashier. Every time he gets money, he will just enter. That's it. Every time he pays money, also he will enter that the money is going out. Okay, he's a bookkeeping assistant, right? So, but whereas accountant is not like that. Accountant is not like that. He provides information for decision making. Right now, based on this, my information to you about the difference between bookkeeping and accounting. Look at some of the points here. Number one, okay, bookkeeping is input for accounting, whereas output of accounting permits information to bookkeeping is input to accounting. Okay, accounting information is input to decision making. That's number one. Number two is the purpose of bookkeeping is to streamline the recording. Okay, the purpose of accounting is to find the results of operations and the position of knowing the position of business. Look at this. And number three is bookkeeping is the foundation for accounting, and accounting is considered as language of business. Okay, accounting is the language of business. This is a sentence that you can use it, right? Whenever a theory question comes, use these jargons. Accounting is the language of business. Accounting is prepared for the purpose of finding out the result of business and financial position. So try to imbibe these kind of jargons, so that whenever you're writing some theory, these sentences, these terms will be useful to you, right? So bookkeeping is carried out by junior staff, just like I told you, the cashier, the junior accountant, and people like that. But accounting is done by senior staff, especially with accounting knowledge, especially particularly by a professional, at least by a chartered accountant. Okay, or sometimes at least by a the one who has done intermediate of ICAI, okay, or CMA, right? Objects of bookkeeping is to summarize the effects of economic transactions. Object of accounting is not only bookkeeping, but facilitating analysis and interpretation. Facilitating analysis and interpretation, right, ma? So this is accounting cycle, right? So you may get question, what is accounting cycle? A short question. Just present this chart and write the description, right, which is given here. It may be for 5 marks or 6 marks, right? Sometimes it may be for 10 marks. Very rare, that is rare case. And what is the difference between bookkeeping and account? This is a common question wherever you go. Even in the interviews, what's the difference between bookkeeping and accounting? You must be able to say this, okay? Not just for the examination, but for your own understanding, you must understand what is the difference between a bookkeeping and accounting. Okay, right. So can you see my screen?
Yes, sir.
Yes, sir. Wow.
Any questions here?
No, sir.
And close to this, we will go to the next, right? Types of accounting. And I forgot to tell you, Ma, okay? Please come with your notebooks, okay? And we are about to start our problematic technicalities, right? When we start technicalities, we have to note down, we have to, write down what we are speaking, right? So it's easy. When you're writing down, you remember. Okay, So, and this is an exercise, and don't feel it inconvenient. Okay, when you're coming for the class, sit on a table. Don't sit on in a couch or a bed, or don't lie down, right? So I want you to come prepared for the class properly, right? Next.
Sir,
Yes.
sir, the Word document for types of accounts is not available in the Moodle, sir.
It's not available.
No, sir. Word document is not there. Only video is coming, sir.
Okay, I will note down. Thank you for the info. I will add it. Okay, maybe it is slipped. Okay, I will add it.
Okay, sir.
I will add it, right? Thank you. Yeah, please do let me know if such anomalies you find, right, ma? So to err is human, but intentional negligence is not appreciated, right? Yeah. So types of accounts, types of accounting. Uh, what is a transaction? We will just look at some terms, then go to types of accounting. What is a transaction? Exchange of, okay, come on, exchange of
Exchange of asset.
asset and discharge of
Discharge of
liabilities.
liabilities.
Discharge of liabilities. Exchange of asset, discharge of liability. What is that? With the consideration of monetary value. Exchange of asset, discharge of liability. And look at this, when I'm selling this pencil to you, okay, let's say this is 5 rupees. This is an asset for you. You will use it maybe for a week or 10 days, right? I'm selling this to you. When I'm selling this, I'm giving this asset to you. In exchange, what will you do? You have to discharge your liability. What's your liability? You're obligated to pay me rupees 5. Okay, when I'm saying rupees 5, it is a money value, monetary value, right? So the buying and selling between you and me is a transaction. It is not necessarily all the time be buying and selling. I pay the employee's salary, workers' wages. What is that? It's a transaction, right? And there is a obligation. There is an obligation for me. He has sold his service, he has rendered his service, and I'm obligated to pay for his service. That's transaction. Event. What is an event? Yeah, an event is something that happens at a particular point of time, right? Okay, that is an event, right? So we say that all transactions are events, but all events are not transactions. There are many events. There are many events. Your friend comes, you're an accountant, your friend comes, you go out and have lunch together and you pay from your pocket. You cannot bring that bill and add it in, add it and account for, company account as company's expense. It is your friend, your classmate in high school. And now you are working as an accountant. As he has visited you, you paid for him. It is for showing your affection on him. But that is not a business transaction. It's an event, but not a business event. It's not a business event, right? Okay. Voucher. What is voucher? It is written instrument, okay, which serves to confirm that you or the party has taken money. Let's say if I'm an accountant, I can just misuse the funds now. I have paid Sabrina, I have paid Maria, I have paid Sai Vineet, I have paid Amrut, okay, Isham. I will go on writing that I have paid, right? But did I really pay? That will be checked when there is a paper called voucher. On this voucher, when I'm paying to Amrut, I will ask Amrut to say, please sign here and write there. Sometimes it's already written. Most often on the voucher, it is written. Okay, received so-and-so amount, okay, on so-and-so date. He puts his signature. right? Who is Kapish? Is he from your class?
Don't know, sir.
Okay. So, yeah, look at this. Amrut puts his signature. What is this? It is an acknowledgement that he has received the money so that I don't have the chance of misappropriating the fund. Okay, that is voucher. Okay, that is voucher, right? A voucher is used to record cash or bank receipt. Okay, right? A cash receipt voucher, it denotes a receipt of cash. Bank receipt voucher, it indicates a receipt of check. When I'm issuing check, I will give this bank voucher. When I'm paying cash, I will issue cash voucher, right? Now, payment voucher. Payment voucher is used to record all payments, okay? And double entry system. Here we are, double entry system. You know, when I'm asking some MBA students, okay, in the first year of MBA, first semester of MBA, they have a subject called accounting for management. That's a paper. There, what all you are studying for 3 or 4 semesters, they will study in just 6 months. Accounting one, two, three, okay, and cost accounting and managerial accounting, all 4, 5 accounting papers which you are studying, they'll be clubbed into one subject and they'll study for one semester. What you're studying for 4 semesters, they'll have to study in one semester. So when I'm starting the course and asking them, who is the father of, double entry system, then they don't have answer. But I don't want you to be like that. I don't want you to be like that. Okay? Right? So therefore, you must know it was in 1494. Okay? There's a gentleman called Luca Pacioli. Luca Pacioli. He is an Italian mathematician. Okay? And he has published his idea of double entry system. He is the man who introduced the double entry system. Okay, he's the man who used the double entry system. What he says is, for every debit there should be a credit. For every debit there should be a credit. You know, he used this principle, he used this system for all the mercantile transactions. Okay, and this made a great impact on the business. And today what we practice is double entry system. Look at this man, 1494, nearly 500 years ago, 500 and plus 523 years ago, Luca Pacioli, the Italian mathematician, introduced the system. Now the whole world practices the same double entry system. Okay, I think when I look at that Middle East part, the Italy, the Greece, okay, that belt, it's a hub of knowledge. I feel most of the inventions have come from that place. That Asia Minor, Middle East, right? So this is a man like that. What are the features of his system? He says every transaction has two aspects. There's one party giving and there should be another party taking. I'm paying salary, there must be somebody to receive that salary. Okay, I'm selling goods, there must be somebody to buy those goods. Okay, I'm paying tax, there must be a government to receive the tax. So every transaction has two aspects. There's a debit and there's a credit. Every transaction is divided into a debit and a credit. If one account is debited, naturally, automatically, the other account is credited. Every debit must have its corresponding and equal credit. Look at this, man. Underline this. This is the sentence that you need to, no, not just this sentence. This is an important sentence, but all these three are important. What are the features of double entry system? Or if anybody asks you, what is double entry system? Any of your elder brothers or your uncles ask you, or in the interview somebody asks you, what is double entry system? Yeah, double entry system double entry system, follows, right? Follows that every debit must have its corresponding and equal credit. Let's say if I'm paying salary of 10,000 and that is received by the employees, whatever they receive must be equal to whatever I pay, right? That is what the meaning of this third sentence. And every debit should have a credit. Okay, every debit should have a credit. Okay, double entry system is a twofold aspect system, right? Now, according to this, we have account. We have account. Now, since I did not tell you, I'm not asking you to write, but from next class, you must sit in the class with your notebook and pen and pencil and scale, right? So that, we will be doing accounts. Actually, I should have told you in the last class, so I just missed to tell you. But for the next class, please join me with your notebooks, plain notebooks, 100 pages, plain notebooks. Notebook is enough. So whatever we have to write, we will have to write, right? Let us say I'm showing, you may question me, sir, is it must that we should, sit with a notebook? That will be your next doubt. I say it is must. I say it is must. When I'm teaching you how to drive a car, however much I teach you, what will you say? Sir, can you allow me to sit in the driver's seat? Can you allow me, please sit? No, 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 don't sit here. Don't sit here. Okay? You sit there only, just beside me, and see how I'm driving, and see how I'm just, pressing the clutch, and how I'm moving the gear and all these things. You just see me, okay? But don't come into the driver's seat. As long as you don't come to driver's seat, take it for granted, you will never learn driving, right? So therefore, we had to feel everything how the accountant does. Okay, how he prepares the account. We have to start doing as if the accountant is doing. Then we learn accounting. Experiential learning is what is needed, not just listening, going on listening. That is not going to help you in any way, right? The concept of accounting. Now we are beginning now with the accounting. Account. What is an account? It is summarized record of all the transactions, okay, pertaining to a person or a thing. Pertaining to a person or a thing. What? There is an entity. There is an entity. The entity can be an individual. The entity can be Saifuddin. Okay. The entity can be, let's say, a keyboard or a printer. Okay, right? So it can be a thing or it can be an individual. If all the transactions related to that particular item or that particular person are just dumped there, and that is an account. But it is not just dumping, you have to follow the rules. While dumping, you have to follow the rules. What are the rules? What are the rules? Okay, the rules we will follow. The accounting is also related to things, both tangible and intangible. Okay, it is expressed as a statement in form of English letter T. Look at this one. It is T. Let's say cash account, right? Cash account. Now I will divide the cash account like this. On the left side, I will take all the transactions of debit, all transactions of credit on the right side. Now look at this. I will request Saif to read it. Okay, Hisham never read it, I think. Hisham, typically from here, can you read? Hisham?
Yes, sir.
Please.
From typically side, sir.
Yeah. Typically,
Typically, an account is expressed as a statement in form of English letter T.
yes.
Two sides.
It
The
has
left,
two sides. Okay.
the left-hand side is called as debit
Yeah.
side, and the right-hand side is called as credit side.
Yeah.
The debit is denoted as DR, and the credit is denoted by CR.
Okay.
Convention is to write the DR and CR labels on both sides as shown below.
Okay, right? It is not. When you say what is the course you have taken, what is the program you have chosen, as you say BCom or BCom, what are the subjects? There's accounting, okay, there's economics, and you go on listing foreign trade, and you go on listing. When you're listing, they'll, hey, come on, wait. Accounting, what do you do there? I have a doubt. Your, BTech cousin will ask you, hey, in accounting, what is that? All the time you people keep using, two terms, debit, credit, debit, credit, debit, credit. What is this? It's sickening, okay? It is sickening to use, those two. I'm fed up with using those words, listening to those words. What is that? What is your answer to your cousin? Anybody? Debit or credit? Can you please tell me? Attempt, ma. These attempts are not to, scold you, but to, pick out your thoughts. When they ask you question, what is debit, what is credit? What's your answer? That's what I'm asking.
Debit the receiver, credit the giver.
Debit the receiver, credit the giver. That's a rule. But what is that? Again, they'll ask. Debit the receiver, credit the giver. What is that? I didn't understand anything. Anybody else? Next, please. A good one, good attempt. Anybody else? Anybody else? Jeevan, you have any thoughts?
Sir.
Hmm.
No, sir.
No thought. Okay, Likita.
Mm, Debit what comes in and credit what goes out. Like all the expenses and expenditure are debited and all the income will be credited.
Okay, all the income will be credited, all the expenses will be debited. Okay, but why do you what? But my question is not that. What is debit? What is credit?
Their accounts.
Huh?
Their accounts.
Okay, my good attempt. All of you, you have attempted good. Okay, attempt is what important, right? Right or wrong, I will decide. Okay, ma? Good attempt. Right. Okay, look at this. Read it now. Lakita.
The left hand side is called as debit side and the right hand side is called as credit side.
Okay. Now, left hand side is debit side, na? Right? Okay.
Yeah, sir.
And what is debit? Debit means to write on the left hand side. That's it. Credit means to write on the right hand side. That's it, as simple as that. It is not a very complicated technicality. Okay, this is as simple as this. To debit means to write on the left side. To credit means to write on the credit side of the account or right side of the account. Okay, the short form of this debit is denoted as DR. The short form of credit is denoted as CR. The CR is not a creditor and the DR is not a debtor. Don't think like that. It is just a short form given. Okay. And, people read it as, let's say, Maria Brahmam debtor to Arvind. Yeah, Maria Brahmam debit to Arvind. Debit to Arvind. Okay. Maria Brahma debit to Arvind. Right? So to debit means to write on the left side. To credit means to write on the right side. So debit is, when you're, okay, we'll come back to the journal at the time. I will discuss. Right. Please check the time and stop me when the time is up. Right. So there are accounts, types of accounts. Now we have come to types of accounts. The accounts are broadly three types: personal, real, and nominal. Okay. The personal accounts are divided into three types: natural person, artificial person, a representative person. Okay, natural person, artificial person, representative person. The real accounts are divided again into, okay, tangible and intangible. And nominal account is, it is not classified, right? Accounts related to persons. Persons can be natural person like Arvind, Hisham, and so forth. Okay, they're all persons. A bank, Andhra Bank, is a person, artificial person. Sometimes there may be a representative persons. Okay. Now, real accounts, accounts related to assets. The assets can be tangible assets as well as intangible, tangible assets as well as intangible assets. Right? Accounts related to assets or real assets. Accounts related to expenses and incomes, losses and gains is nominal account or nominal accounts. Okay, accounts related to nominal accounts related to expenses and incomes, losses and gains are nominal accounts. Okay, so I think there's somebody messaging. Yeah, anyway, we have almost we are done with the, yeah, the time, though the, yeah, 10:20, we will close here, right? We will close here, and maybe we will,
Sir, please upload the Word document, sir.
this one, okay.